how to draw the bearish pitchfork tool like a pro. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochasticmighty.com, www.dayprotraders.com, www.24elliottwaves.com. For pitchfork tool trading, dayprotraders.com. Today we're going to discuss how one can draw a bearish pitchfork tool like a professional trader. All right, what are we looking for? All right, at the end of this video, one will be able to understand the importance of the pitchfork tool. All right, and one will also know exactly how one can draw a bearish pitchfork tool. All right. The pitchfork tool is one of the most neglected trading tools in the financial market. A lot of ordinary traders do not use the pitchfork tool. A lot of average traders forget to use the pitchfork tool. And many other traders, all right, ignore the pitchfork tool, all right. So at the end of this video, one will realize, okay, the power and the importance of the pitchfork tool, because the pitchfork tool allows traders to pinpoint high probability trade setup, to identify the best hotspot trading zone, okay, and to make excellent trading decisions on the edge. All right? I recommend to traders to watch the full length of this video, so they may also understand how to use the Andrews pitchfork tool like a pro. All right. So 3 points we need to draw the pitchfork tool. By the way, if one wants to understand more of the pitchfork tool trading, one must go to www.dayprotraders.com. So I'm not going to dwell on it too much, but I want to show you how to draw a bearish pitchfork tool. So we need 3 points. So the first point is a high, okay, price display high, okay, followed by a lower low. Okay, price display lower low. So the price was going up fast, display a higher high. Now a pullback, display a lower low. All right, compared to the previous low. So because the price was going up before, it must display higher lows, higher high. Now price pulling back, displaying for the first time a new lower low. Okay, so first condition, price going down, okay, displaying a new lower low, followed by a rally, price now after going down, rally a little bit up, all right? But as the price was rallying up, okay, it failed to display a new higher high. Therefore, we have a lower high. So this is the previous high, followed by a lower high after this rally here. So to verify that we are drawing the correct pitchfork tool, this section here, the rally, we want, if we are using the trading volume, we want to have a low trading volume. So we don't want to have a significant trading volume. We don't want to have a surge in trading volume during the rally period. All right. So I think that a lot of traders have already watched the video that we call how to draw the bullish pitchfork tool. And we were telling traders that when the price was pulling back, it must come down, okay, in the case of the bullish pitchfork tool, under a low trading volume. So for a bearish pitchfork tool, as the price is rallying up, okay, if we are using a trading volume, okay, we want to have a low trading volume. This is very important, a low trading volume during the rally session, all right? Now, the next thing I want you to understand, sometime, repeat, sometime during the rally periods, all right, the price, we may see a surge in trading volume, all right. This is a special case. So if during a rally we have a surge in trading volume, we want the lower high, this lower high here, to be quite closed, near, okay, very close to the previous high. We want it to come very close to the previous high. This is very important, all right? Did you get that? So in normal condition, during a rally after this move down, we want to have a low trading volume. Okay, this is a normal condition. But sometimes, if during a rally we have a surge in trading volume, in that case, we want to have this lower high a little bit close to the previous high. The next condition that we want to see before we can start drawing our bearish pitchfork tool, the price must change direction at this point here, the point that I call point C. So this is what I call point A for alpha, point B for Bravo, and point C. So price goes down, price rally under a low trading volume, and at the point C, we want to see the price changing direction before we can draw the pitchfork tool. The reason is sometimes traders will rush to draw their pitchfork tool as the price rallying up, but the price will continue to rally up and they will have a kind of a distorted pitchfork tool. So it is important that at point C, C for Charlie, the price starts changing direction, telling us that okay, this is a pivot point, this is a new lower high. As it starts changing direction here, then we start drawing our pitchfork tool. I don't want the video to be too long, so I have here my pitchfork tool, and I want you to follow me carefully. So you can see here, the price start going up big time, yes or no? This was the previous higher low, okay? It's a psychological price level, okay? All right? So price went up, display this high, and then it pulled back. Now here, this is not, okay, our requirement. We will prefer this low, this is point B, right here. We will prefer this point B to be lower than the previous low, but it is not. This is, again, the reason why I choose this example is to show you that sometimes you may not have a lower low. In that case, if you are using a pitchfork tool, we need to be careful because the point B is not a lower low compared to the previous low here. Because the price was going up fast and the display this high, pulled back, but it did not display a new lower low. So the reason why I choose this example is to show you that sometimes you will have this scenario when the price will display equal low. All right? But now, once again, this is a special case. If the price failed to display a new lower low, the point C must be very close to the point A. This is a point A for alpha here. As you can see here, because the price failed to display a new lower low, but has instead displayed, okay, equal low, the point C, in this case, should be, we will prefer the point C to be closed to the point A. You can see we have a double top here. This is a nice one because the price did not display a new lower low. If there is something else that you did not understand, you can replay the video to understand what I'm saying here, because I don't want to dwell on this. So here, price that did not display a new lower low, as it's going now, we will prefer it to come very close to the previous high. Same thing, if we have a surge in trading volume during the rally, we will prefer the point C to be close to the point A. So because we want to use the pitchfork tool like a pro, we want to know the verification that we need to do so we may know exactly what kind of risk that we are trading. All right, this allows us to manage the risk and also to filter out the best, Andrew pitchfork tool trade setup. Remember that the most neglected trading tool is the pitchfork tool, but the pitchfork tool is a powerful trading tool that allows traders to identify hotspot trading zone or high probability trade setup. Okay. So this is a special case, A, B, C. Now I draw my pitchfork tool, the median line. This is the median line of the pitchfork tool. So it is a channel. So that's why I say to you, go to dayprotraders.com and to watch video about pitchfork tool trading. I don't want to talk too much about the media line and blah blah blah. It's a channel, okay? This is the media line, okay? So we have a pitchfork tool drawn at this point in time as the price. You see here, point C, the price must start changing direction before we draw our pitchfork tool. So this is how we draw a bearish pitchfork tool, like a professional trader checking, doing the verifications. So this is my first pitchfork tool. I'm just going to color it now. Change the color to pink to please the beautiful ladies. So this is my first pitchfork tool. My second pitchfork tool, pay attention carefully here. We need again 3 points. Here we are. Are you with me? Stay tuned, okay? Focus carefully, okay? So now we have again 3 points. Price went down. So point A, point B. Point B, we want it to display a new lower low compared to the previous low. We are comparing this low to this one here. So we have a new lower low. Great stuff. Beautiful. Okay? You see now? So we want a rally without a surge in trading volume. If we see a surge in trading volume and the point C did not come near the point A, we know that it's a little bit tricky. It does not mean that we cannot draw it. It does not mean that we cannot trade it. But we are aware that it's a little bit risky. That's all we want to know. Is it a risky trade? Is it a risky trade setup? We want to know. So if it is a risky trade, we want to manage the risk carefully. You see now? So here, if I put it, I don't want the video to be too long, so I won't put the trading volume. So if we have, for instance, a surge in trading volume in this session from B to C, we will prefer the point C to be near the point A. But if we have a surge in trading volume and the point C is here, all right, we know that it's a little bit risky. All right, it makes sense. So we have A, B, C, all right, and we have a new lower low. And in this session, we prefer, as the price rallying up, a low trading volume. Then we draw our pitchfork tool. This is our new pitchfork tool. I'm going to change the color into green now, so you may see my new pitchfork tool. That's the green pitchfork tool. As I explained to you, the price must start changing direction at point C. So as you see here, start changing direction here. Now we draw. So one candle is enough. See here, dropping down, or 2 candles here. Now I can draw my pitchfork tool. So after this second candle here, I'm on a monthly chart of Pfizer stock. All right, we can use this strategy on the hourly chart, on the 50-minute chart, on the 4-hour chart, daily chart, yearly chart. The key point is to identify what we call hot spot trading zone in order to trade on the edge. It makes sense? It makes sense? Okay, great stuff. Okay. All right. So I draw my pitchfork tool. So what are we looking for? We are looking for the intersection of key support and resistance level with the pitchfork tool. So why, my friend? If we want to buy, or if we see a bullish trade setup, we want that bullish setup to be on the edge at a support level. So we can combine the pitchfork tool with normal support and resistance level. It makes sense? It makes sense? So as the price is rolling down, you see why it stopped on the edge of the median line of the pitchfork tool. But remember, because this is a bearish pitchfork tool, what are we looking for? We want to give priority to what? Bearish trade setup, bearish signal. All right? So here, this is on the edge. This is a hot spot trading zone because price went down to retest the median line. It's a hot spot trading zone, but it is what? A contra trend. Why is a contra trend? Because the market pattern is bearish. See the channel, the green channel? Contra trend. So if we are buying here, which we can using a top-down trading method, we are buying here, but we also know the risk that yes, the market pattern is bearish, but we decided to buy here on the edge of this pitchfork tool. All right, you can see that on the chart that this is not So you see now there's a bit of tail here. Whenever you see a tail of a bullish candle, it's a support zone. You see the tail of this candle here. See this candle, the tail. And whenever you see a tail like this, think of support. Okay, when it's a bullish candle, you see a tail like this. This is okay, support zone. All right, think of it. So it's a support zone. All right, this zone here, where the price retested the edge of the pitchfork tool. All right, this support zone. Talking about this zone here, and the price retested it right here. All right. Okay. It may not be visible to other traders. Other traders may know or see this, but the price will retesting the median line. We'll use a top-down trading method, but we know that it's a bearish channel. The market pattern is bearish. This is a risky trade. This is a contra trade. It's a rally again. This is a rally in a downtrend. We want it to be under a low trading volume, okay? But because we have a bearish pitchfork tool, we want to give priority to sell signal on the edge. So this is where we are looking for. We test the median line. We can trade this one if you want to buy, but this is a risky trade. But here we want to sell. So what are we looking for? We want to sell where? At a resistance zone. So whenever the price retest the price on the edge, this is a bearish trade setup. Ask yourself, which resistance do we have? So you see this went down. This is a resistance zone. The zone, so you see the tail here, okay? Resistance, price pull back, it's a pivot point, it's a key level, went down, change direction, it's a key level, this blue line here. So price break below the blue horizontal trend line and retest it on the edge and also on the edge of the pitchfork tool. So now, the common trading mistake that traders make, they will just go and sell. So they keep their fingers crossed, some will cross even their legs, all right? What else can we cross? I don't know. Maybe you cross your hairs, hoping that, okay, everything will work beautifully. Don't cross your legs. Don't cross your fingers, all right? Use a top-down trading method. So at this point in time, because we're on a monthly chart, all right, we will say, okay, this I'll have my warning line, which is this resistance now. I'll color it now into orange. Okay, you see now the orange line. And then now I'll call this is my trading setup. I can now switch to the daily chart, looking for signal, okay? I can break it down from the daily chart down to the 2-hour chart, okay? And I can break it down from the 2-hour chart to the 15-minute chart. I can break it down from the 15-minute chart down to the 3-minute chart to perfect my entry point. All right? So they set up, they signal, but we can use many time frames, many other lower time frames, for my entry point to select the best entry point. So I can use monthly chart in this case as my trading setup. I can use daily chart for my signal, and I can use, okay, 2-hour chart, 50-minute chart, even break it down to a 3-minute chart to pinpoint the best entry point and to minimize my risk. So with these 3 points, I was able to draw my bearish pitchfork tool. Verify we have a new lower low. Price rallying up, we want it to go rally under a low trading volume. It's a bearish condition. This is a contra trend here, though this is a hot spot trading zone. You see how the price pulled back to retest it. But it's a contra trend until we come out of the channel. Okay? So now I want to sell. I'm giving priority to sell signal because the market pattern is bearish. So this is a bearish trade setup. So I may ignore this, I may not trade it. I can day trade here, I can swing trade here, but I'm aware of the risk, okay? Here, I can day trade, I can swing trade. So TSCW24 trader, price a hot spot trading zone, can switch to the first best time frame, and again, draw your channels, your trend lines, okay? Combine the key level of the higher time frame onto your first best time frame. You can see them, okay? And then you want to trade around those key levels that you have drawn from the higher time frame, taking beautiful signals. All right? If you are swing trading using a TSCW you can do exactly the same thing. So here, this is a trading setup, not a trading signal, not entry. You're on a monthly chart. In the past, years ago, traders were trading like this, okay? But the market has changed a lot, okay? So don't cross your fingers, don't cross your leg, don't cross your hair, I use, okay, a top-down trading method. This is to make you laugh a bit, okay? Because when we are recording videos like this, we want to breathe in and breathe out. So you see now, this is how we have a bearish pitchfork too. Great stuff, yes or no? Okay, beautiful. The next thing that I show traders that no one else has talked about on YouTube so far is that sometimes you see that in fact your pitchfork tool, your bearish pitchfork tool, has become obsolete. What do I mean by that? In fact, a little bit useless as the price is out of it. How do you handle that? What I tell traders to do, you see my green channel, my pitchfork tool, the median line is the middle line which has divided the channel into two. So I want trader to measure the width of half, okay? 1/2 of the pitchfork tool. This is the first half. This is the second half of my pitchfork tool. See the median line divide, okay, the bigger channel into two. So measure the width of the half, 1/2 of the pitchfork tool. If the price goes out, you project it to the other side, and then you draw a line that is parallel to the pitchfork tool. So by projecting the width of my, this is what we call market geometry. One cannot use the pitchfork tool if one does not understand the market geometry. All right, projection of channel, that's what we call market geometry. So as it's out of it, we project half. We have another green line. I'll color in fact into dark green. All right, so we have a dark green. All right, right here. Okay, so now the price out of this the pitchfork tool, our pitchfork tool become a little bit obsolete. Now we project it half, 1/2 to the other side. We have the dark green. You see now, okay. So you look what the price has done. The price came out of the pitchfork tool, went a little bit up to, you see. So if you project, so you project 1/2. Well, pay attention. You project 1/2, okay? So price out of it. This is your target. So it's rallying from the edge. Your first target is this one here. If it's break that, you project it again. If it's out of it again, you project it. You just keep, okay, projecting. That's what we call market geometry. So your first, by doing this, you know that the price has a high chance to stop somewhere along this, okay, projected line here, the dark green here. But the beauty of it, you see, we have another smaller channel between the light green and the dark green, and the price roll it down. You see this small part, it went down slowly. The blue line here is the median line of my smaller channel on top here, this declining channel. Does it make sense? This channel here, okay, the channel between the light green and the dark green. So the price went on the upper side and only to retest it here. Beautiful, isn't it? Again, like I said to you, because the pitchfork tool allow us to pinpoint high probability trade setup, okay? Whenever we want to buy or sell, so you see the price retest it here and start changing direction, okay? Start changing direction, okay? It's telling me that I'm going up. You can be patient sometimes. If you don't want to be patient, okay, so we will draw what? A warning line here. So price went, so come back and retest the edge. So we draw horizontal line. There's a support here. See this zone here. It's a support zone. So price went up a bit, a pullback with two candles here. Okay? There's a kind of support. The support is a little bit up here, but it's a support zone. This section here, this support zone. Okay? This is what has happened here. Okay? Right here. Alright? Sometimes you may not see any support at all. So which tool do you need to use? You use a Fibonacci extension, Fibonacci retracement levels. So I drawn one already here. You see the price went up from here all the way up here. I have my Fibonacci retracement level, and you can see here the line. If I show you now, attention please. This is about how to draw the bearish pitchfork tool like a pro. At the same time, we are talking about market geometry and also about okay, advanced trading. So pay attention to the red horizontal line. This is 78.78% Fibonacci retracement level. Okay, so sometimes if you do not see, okay, a clear-cut horizontal support and resistance level, use Fibonacci retracement or Fibonacci extension level to combine it with pitchfork tool at a conversion point at a hotspot trading zone. I want to tell traders that below the 78.6% Fibonacci retracement level, I do not use 78.6, I use always 78%, exactly 78, but the correct Fibonacci number is 78.6, all right? So this is 78%, not 78.6%. Below the 78.6%, we have what? 88.6%. In my view, the prime went down to 88.6% Fibonacci retracement level here. Now, traders who are trading, okay, Fibonacci pattern, bat pattern, butterfly pattern, okay, this is about multi-talented trading, will know exactly what is happening here. So again, if you want to know about Fibonacci pattern, butterfly pattern, bat pattern, go to Dayprotraders.com. All right. So you want to combine the pitchfork tool either with horizontal support and resistance level at the time when you are about to trade, or buy or sell, or with a Fibonacci, okay, retracement or extension level. Here, some traders may say that, okay, I don't see a clear-cut horizontal support and resistance level as the price is retesting the median line or this smaller channel. I want trader always you are using a trend line, a pitchfork tool, combine it with, okay, horizontal support and resistance level. If they are not visible, it means that you have to use Fibonacci retracement or Fibonacci extension level. Again, these are not magical levels. These are, okay, key levels that allow us to pinpoint, okay, high probability trade setup. At the end of the day, my friend, you may understand all I've said now, but the most important thing when it comes to trading, you will apply a top-down trading method without violating the market pattern, the economy news, and the fundamentals. So here we are, okay? You see now? So the median line, but you see how I did it? Okay, it makes sense? So this, we draw a pitchfork tool, allow her to do all sorts of things, market geometry, advanced trading, price out of the pitchfork tool, the bearish pitchfork tool, we project it like this. Okay, we draw another line that is parallel, and we can also draw the median line. If we don't want to draw the median line, we are aware of it. Now I draw it, she roll it down, kick, okay? You want to buy, you think it's a setup, ask yourself which support level we are. Don't just go and buy and sell, because if you just buy here, okay, the price can break below it. If you are using a top-down trading method, if the signal fails, you will know. So you will come out, okay? All right. I have another example I want to show you. This time I will look at another financial instrument. Do not forget the verification that we want to do. A high followed by a new lower low, price rally under a low trading volume. If the price rally under a high trading volume, we want the point C to come very close to the point A. All right. If it did not, we know that it's a risky trade. Okay. So we are aware of the risk. We want to manage the risk. Again, if the price did not display a new lower low at point B, all right, we want the point C. We want the price to rally up very close to the point A. All right. If it did not, okay. If we want to trade it, we know that it's a risky trade. This is how one can draw a bearish pitchfork tool by going step by step doing these verifications. If the price out of the bearish pitchfork tool, we can project one half of the pitchfork tool in the direction of the price to pinpoint again the hot spot trading zone. It makes sense? It is also powerful. My apology to trader, I went over my time, but I have not yet finished. So let's continue with this discussion. I recommend to trader to watch the full length of this video to understand everything. This is another stock, Verizon's Communications. Again, I'm on the monthly chart. I can apply this strategy on the daily chart, on the weekly chart, on the hourly chart, on the 4-hour chart. As always, trader must start from a higher time frame to detect the best hot spot trading zone, and then switch even to the 1-minute chart. So you say to me, I'm a scalper. You can go even from the yearly chart down to your lower time frame. Best setup, generate best trading results. Okay. All right. So here again, we are looking for what? 3 points. Okay. Pay attention carefully. So you can see that first, the price was going down. There was a bullish progression. Price displaying high lows, high high. Okay. Now we stop somewhere here, and we have a high. Okay, great stuff. This is how we draw a bearish Andrew pitchfork tool. Price went down. Here, you see it went a little bit, so here, this is great stuff. It went below, okay, the previous low. Great stuff. You see here, this one? It went below it, yes or no? Alright? It went below this one, okay? So this is good. Alright? So it went display new lower low. Now we want it to rally under a low trading volume. You will check the trading volume. If the trading volume is too high, we will prefer the point C to come close. But if it did not, we know that it's a risky, okay, trade setup, and we are watching it. Okay, so we have now 1, 2, 3, A, B, C. Now we draw our pitchfork tool. It makes sense? All right? So you will start putting the media line at point A. You extend, okay, okay. All right? You want me to do it again? Okay, maybe you are very, very new trader. Okay, let's do it like a new trader. So this is how the pitchfork tool looks. So let me remove it. Okay, I'm using TC2000. So what I do, you take it, you see here. You see here, this is Andrew. You see here, Andrew pitchfork. On my TC, I click on it. Then I click on the chart. Here it is. This is what you will see. Then you select. You see the middle point here. Just select it and roll it. Okay, you can turn it. You can turn it as much as you like. Okay. Then you bring the media line at the high point A. Okay, great stuff. And then you select one point here to bring it to the point B. All right, and then you bring the other section because it's a down channel. You want, okay, the first one to be, okay, and then you bring the other one right here. Beautiful, isn't it? Now you have, okay, your pitchfork tool. Okay, don't be. Sometimes you have, okay, like the wick of this candle. Don't be too, okay, strict and say it has to be exactly on top. You can put it, okay, somewhere in the middle here, all right, or somewhere here. Just leave it there. You can even adjust it, okay, as the price will, because we are here at this point in time. We don't know what the price will do. We see one candle down, the price start changing direction, so we put it here, all right. So because why are we using the pitchfork tool? Is to detect or to identify hotspot trading zone. So because it's a downtrend, we want to sell. We want to give priority to sell signal, but we want to sell at a resistance zone using a top-down trading method. All right. So very often traders will use the pitchfork tool after the price moved down for a long time. So you see here it starts changing direction. Traders say, okay, I can use pitchfork tool now. So whether this zone corresponds to, okay, is touching one part of the pitchfork tool. Okay, you understand? So here we are. So we have it now. So the price went down, blah, blah, blah. So we have our pitchfork tool. So if you put it like this, you may say, okay, all right. See? Very close to the pitchfork tool. Yes or no? Very close. So you say, okay, all right. Let's put it exactly to the top and see what we can. So what you are doing, you are trying to go into the mind of other traders. Some trader will put it like this. Some trader will put it, okay, like this. So you are trying to go into the mind of other traders. So just play with it and see what will happen. So by putting it right at the top, okay, see, by rolling down big time and coming to the edge of the pitchfork tool. It's a bearish pitchfork tool. You can see that our first pitchfork tool becomes obsolete or a little bit useless because the price out of it. It's now out of it. So now you know what to do. Okay, now you know. Okay, because we talked about it already, so you know how to do it now. Okay, let me adjust my line here. Okay, so the price out of the pitchfork tool, what do? You know it now. Okay, you will project 1/2 of okay, the pitchfork tool and a drawing line. Okay, don't cheat here, make it exact. You see how I draw it? So I will get it out exactly in the same direction, and I will draw now what? A line that is parallel to my pitchfork tool. Should be parallel, okay? Do you agree? Loose. Okay, what you can do? Okay, put this one here. Something like that, and then bring it at the beginning again. Technical drawing. This is a technical drawing, okay? So you draw your pitchfork tool, okay? You can go on and on, project it more, but now you have it, okay? So price out of the pitchfork tool we project the pitchfork tool, the bearish pitchfork tool to the other side, measuring the width of 1/2 of the pitchfork tool. We've done it. That's the blue line here. You can also draw the median line of that pitchfork tool. Okay, median line, middle line. So when we are talking about pitchfork tool, we are talking about a median line. We are talking about market geometry. We are talking about advanced trading. Okay. Is that a median line? Okay, if you accept that, great stuff. Okay, it looks like the median line. Okay, so the price out of it, and then you pull back to retest the median line. Okay, right here of the second channel. So again, I will color this one into a dark green. All right, you see now? You see now? So as the price retested the edge of the pitchfork tool itself, or the median line of the projected channel, all right, this smaller channel we project to the other side. Okay, so you have it now. This is a trading setup. See how the price ran fast here? Okay, you see the volatility, the tall candle here. Am I talking to myself? See the tall candle here? All right. Okay. All right. So now, if you see the setup like that, what do you need to do? Combine it with horizontal support and resistance level. See here, draw a line there. So this is your warning line. Okay. So it came back to retest it on the edge. Draw it. What you are doing, you are trying to manage the risk. This is my warning line. So you can see the price rally up here, change direction. It's a pivot point, price changing direction there. It's a key level. There is a reason why people sold it there. It went up and changed direction, so it's a key level. It went up again, change direction here. It's a key level. There's a bit of support here, and then you find a support here, and they try to find a support here. Look at that. Again, same place. So I'm quite happy with this, okay, support level. But because the price was going down up to this point, if I am an area wave trader, I may read the internal wave of the move down, okay, to forecast what is likely to take place here. It looks to me that some of my area wave colleagues have found out something here and quickly, okay, bought it fast. That's why the price ran very fast, okay, from this point. Since then, you can see that the price couldn't dip too much below the orange line. Now, that's where we are. See, that's where it found a support. In fact, it went back to display double bottom, a triple bottom, very important level. 1, 2, 3. This is area wave language here on the monthly chart. Okay? It makes sense? It is also powerful. So here we have our warning line. We use a top-down trading method again. All right? Sometimes the price may go fast, may even gap up. If it gap up, okay, that's a different matter. How do we trade the gap? Okay? I will talk about it in another video, okay? I'm going to bring on now another financial instrument, this time, okay? We'll look at General Electric, talking about, okay, how to draw the bearish pitchfork tool. This is a beautiful example here for General Electric. You can see again, beautiful, isn't it? Look at that. Yeah, I admired this for a while, my friend. Okay, so beautiful uptrend. Okay, diagonal move, vertical move, retracement to the opposite diagonal. This is my previous drawing here. I need those lines. That's why I don't want to remove them. So price went up fast, all the way up here. This is the high. Pull back to this point. All right, displaying what? A new lower low compared to this low here on the monthly chart. Compared to this low here. Okay. In fact, we have too many drawings. I can draw one pitchfork tool between this point. You see, 1, 2, 3. Okay, 1, 2, 3. Price went down, price rally. I can draw pitchfork tool, but I don't want to draw that one. Okay, so again, okay, see again, price went down again. Look carefully. It went down again. 1, 2, 3. A, B, C. You can draw another pitchfork tool. All right, and then if you look at the bigger picture, it went down all the way from here. That's what I'm looking at now. You can draw it different way as the price progressing one step at a time. Okay, so now I'm looking at the bigger picture. It went down from here all the way here, but in different stages. Okay, A, B, C. All right, this is the bigger picture. look at my big pitchfork tool. I'll color it now into red to get your attention. All right. So 3 points. A, B, C. All right. Price went down big time. Okay. Now you want a rally under a low trading volume. You see how the price went up? You can see that it's not under a high trading volume. It didn't go up fast. You see the size of the candle will tell you also. The volatility was quite low. It's not big move. It's a shallow. It's a little bit horizontal. Okay, it's a low trading volume. Even if you don't have the trading volume on your chart, by analyzing okay, the size of the candle, you can also understand that this is not a high trading volume. If it was a high trading volume, we would prefer the point C to come closer to the point A. All right, but again here, okay, on a monthly chart, look at that. Now look what the price did. Beautiful. Look at that. Down. Look at that, my friend. Isn't it beautiful? On the edge. Now I'll move my line a little bit. Okay, see that I'm getting a little bit excited. And I hope you're also getting excited about it. One trade. And it hit it here. Boom. Bye-bye. Bye-bye. That's it. Goodbye, my friend. Goodbye. Since then, you're just rolling it up so far. And you can see, if again, look carefully, on the edge of the media line of the pitchfork tool, hot spot trading zone, all right? After you see, even trader who understand area way, you see 1, 2, 3 on the edge. That's it. Bullish progression, motive wave, followed by a correction. The area way cycle, at this point in time, we can say that is completed. We may end up having a complex waves, but at this stage, that's what we have. But this is not about area way, it's about bearish. Okay? How to draw a bearish pitchfork tool. So you see as the price going up, bearish traders would like to sell on the edge of the pitchfork tool. So you see here, it rally again from here all the way. So this is a contra trend. Remember, this is a contra trend because the market pattern is bearish. You understand area wave, you can think something differently. But we are talking about pitchfork tool, okay? So here it start going up, coming here. I will not try to sell this one because I understand area wave. But suppose you do not understand area wave, okay? Alright, so you will say, okay, resistance zone. But before that, one thing I forget to say. So price come here on the edge, we draw our warning line. We want to verify whether this is key levels. Look at that. Price rally. Touch it here, pull back, retest it here. You see here? It's a key level, yes or no? Resistance zone, resistance zone, resistance zone. It's a key level, this line here. So our warning line, at the point when we are taking the contra trend, okay, the horizontal line, you can see that, okay, it's a key levels on the edge. If you cannot see it, all right, okay, you may call it, okay, a cycle point because they move in far. We can see that it started here, but I don't want to dwell on it. Okay, price start going up from here all the way up here and come back again to the starting point. It's a cycle point. All right, so it's a cycle point. Cycle point is a key level. All right. So here we use a top-down trading method, whether we are trading or investing. So you want to buy and hold, okay, buy at a support level. Okay. All right, and if you are a fundamental trader and you know also how to apply a top-down trading method, you can make excellent, okay, investment decisions because you want to time the market correctly. You have done your fundamental analysis, okay, you want to buy the stock, but you want to time it correctly, all right, time it, okay. The fundamental traders are the worst market timing. But some of them are distorting also the market because these are big market players, especially some of the hedge funds that are big, that are market movers. Some of them do not know anything about technical trading. But I mean, now the mood has changed in the past, but now hedge funds are using, okay, technical traders that are telling them, no, you want to buy, but we can't afford to buy now. We wait, okay, for a setup, a proper setup, and to time the market more accurately and to avoid distortions in this messy market, okay? Nice, isn't it? Beautiful, gorgeous, okay? So this is how we draw a bearish pitchfork tool like a professional trader, okay? So here, again, price rally up, we want to see check the trading volume. Is it under a low trading volume? Great stuff. If you display a lower high, check whether the rally is under a low trading volume. Alright, if it is not under a low trading volume and you see it as a bearish trade setup, you want to be careful, controlling the risk. So this is a resistance level. You see, this is a price change direction here. It's a key level. Went down, change direction here. So what the price did, it rally up to retest this level. So because we have a bearish pitchfork tool, this is what? A bearish trade setup. So we draw a warning line. We check with that resistance zone at a key level. We draw a warning line. Okay. Now what do we need to do? As a TLCWSY is usually a trader, swing trading, from this monthly chart, okay, we can now go to the signal time frame, wait for a signal on the edge, because we're on the edge. If the signal fell, run away, okay, come out. That's what I meant. Come out, wait again. Sometimes the price may do blah, blah, blah. This is one thing that traders find difficult to deal with. They don't like price moving up and down. Sometimes the price will do that before, okay, set in a proper direction. It will do that sometimes. Touch it, touch it, touch it, touch it, okay, before rolling down or rolling up, okay. Top-down trading method. So this be on a monthly chart, top-down trading method, and then we take it, okay. Signal time frame, TSCW, key 02. Day trading with TSCW 24. We are at a hot spot trading zone. Okay, go to your first best time frame, draw the lines, okay. Hopefully you see on your first best time frame. If you don't see it, note the level down. It's 2100. All right, and trade around these key levels. Make your decision around this key level. So you will be giving priority to bearish signal, because as you can see on the monthly chart, as the price holding it down here, the price will be in what? In a declining channel here. On the weekly chart, you will see it. On the daily chart, you will see that it will be in a declining channel. So you can switch to the daily chart to pinpoint another hotspot trading zone in a declining channel on a daily chart. For day trading, you want to trade on the edge, always on the edge. So from this monthly chart, you can switch to the daily chart and then to zoom into the best hotspot trading zone as you are day trading every day. Because you want to sell, you don't want to sell anywhere, anyhow. You want to sell on the edge. You see here? As the price is rolling it down, sometimes traders get too much focus onto the pitchfork tool. We are not trading a pitchfork tool, we are trading a price. Price going down, pay attention to the price. Always draw the pitchfork tool, do your verification, but your attention should not be 100% on the pitchfork tool. Your attention should be 50% on pitchfork tool and 50% on the price. See, price change direction here, support, so I'm rolling it down. This is support level. We are trading the price, form a double bottom here. After this, you see there was a low at the key support level, now followed by a double bottom pattern. TSCW24 trading is what we call a high probability trade setup. There is a video about this. A low followed by a double bottom is a high probability trade setup. Okay, here it is. Boom, bye bye. Okay. It makes sense? Alright. I will bring on now another financial instrument. This time we will look at United Health. Though I'm using a monthly chart, this strategy is valid drawing a pitchfork tool, bearish pitchfork tool. We can do it also, okay, on any time frame. Hourly chart, 2-hour chart, 15-minute chart, 5-minute chart, 3-minute chart. We can draw the bearish pitchfork tool. And the verification that we are discussing here, we can apply them on any time frame. Traders can use pitchfork tool. Investors also can use pitchfork tool. I need to remind ordinary traders, average traders, that it's so important to incorporate the pitchfork tool in your trading strategy, because professional traders use a pitchfork tool. The most neglected trading tool is the pitchfork tool. All right, I've seen it all the time. Traders do not use pitchfork tool. Use pitchfork tool every day, every night. All right, make it your best tool. You can combine pitchfork tool with stochastic, with RSI, with MACD to detect the best hot spot trading zone. You can use pitchfork tool when you are using TSCW24, SYS usually. You can use pitchfork tool every day, every month. It's so important. All right, do not ignore the pitchfork tool. It's a powerful trading tool. All right, so here we are again, United Health on a monthly chart. Okay, we're going to wrap it up soon. Stay with me. So price went up again. This is a high. Okay, price pulled back, display a low. So you can see that if you look carefully here, it's not very clear again. You see, it's not very clear. Oh, it's not very clear. There's a kind of support here. See the dojis here? It's a kind of support here. But it's not very clear. It's a low. Okay. All right. So if you don't want to call this as a low, so you can say, okay, it's a bit risky. All right. All right. Great stuff. We understand this. So this is our third point here. You have to understand that the price will start changing direction, so we have at least one candle or second candle before we draw a pitchfork tool. As you see, the price start going up, some traders start selling here. So probably traders start drawing the pitchfork tool here first. Price did not change direction as such. Here it did a little bit, but quickly you see here, touch the edge of the pitchfork tool, and then continue to go up. Be patient when you are using a pitchfork tool. Be very patient. Okay, here it's now clear. 1, 2. Okay, it's going down. Okay, it's going down. Okay, all right. So 3 point. All right. So we have our pitchfork tool ready. Point A, point B, point C. We want the rally to be under a low trading volume. Okay. If it is not, it's a risky trade. All right. Because it's a bearish trade, we want the price to go down under a high trading volume and to rally under a low trading volume. So there is a less demand to sell and high demand to sell. If you want to sell, we want to have a high demand to sell. If you want to buy, we want to have a high demand to buy. Learn about volume stock trading at Dayprotraders.com. Okay, so we have our pitchfork tool. Okay. So price rolling it down, you see here, it came here. This is what we are talking about. If you don't use, okay, you see here, so price came here, you see, it's on the edge. You say, this is what George said, okay, great stuff. So you draw your warning line after this candle, you say, okay, George, this is what George said, we are on the edge. So you want to buy and sell, okay? So you check the horizontal line, but as you can see, I would prefer this support here, okay, this one. Or you may put it like this, okay? So you say, okay, here we are, okay? If you do not use a top-down trading method here, my friend, look, that's what swing traders are doing. You say, okay, I want to buy here, we are on the edge. You buy, and price went down. You use a top-down trading method, you will see that the signal has changed, and you will come out. Okay, in fact, if one is buying here, it's a contra trend. Price went down, display a lower high, priority to bearish signal. In fact, the price did below the previous low also. So buying here is a risky trade. This is what we are talking about. So by using the pitchfork tool, we can also manage, okay, the risk, all right. At the same time, we can identify the best, okay, hotspot trading zone or high probability trade setup. So though, because we are drawing a bearish pitchfork tool, we want to give priority to bearish signal. So you may decide not to buy at all in this scenario as long as the price is inside the bearish pitchfork tool. Instead, you may concentrate on bearish trade setup, which means you want this pull back like this. You want it now to rally to the edge of the pitchfork tool right here, and then you use your top-down trading method and then sell it down. But if you are buying here, this is a contra trend because you are trading against the trend. But if you want to buy, sometimes it works, as you can see in the previous examples. Okay, so here you see the price finally crash through that horizontal line to retest the edge of the pitchfork tool here. Once again, pay attention. Trader who bought it here again. So here we are, we're on the edge. Here was also on the edge. You want to buy here, it's a contra trend. Check whether you're at a support level. This is a better support level here. You use a top-down trading method. It's a contra trend. Price going up, take profit on the edge of the median line. Okay, because it's a contra trend. You want to secure gain, you want to grab profit steadily. Okay, if you understand area wave, you may do things differently. Okay, a bullish progression multi-wave 1, 2, 3 at a support level. All right, you may also combine the horizontal support with a Fibonacci retracement level. All right, multi-talented trading, it's a different matter. We can't cover everything today. All right, so we want to concentrate on the bearish pitchfork tool. As you can see here, So now you see price rally now from the edge all the way to this edge again. Here, this is a bearish, okay, trade setup, not bearish trade signal. Pay attention to the vertical turquoise line, my friend. Here we are, this point here. Again, same horizontal line. You see here, same level. Great stuff. Color it into orange. Now implement a top-down trading method. If the signal fell, come out. You can see that the price went down a bit for 3 months. We're on the monthly chart. That's a long time, okay? So you can day trade all this time. Okay, you see the price was right in the edge of the upper side of the pitchfork, bearish pitchfork tool. But finally, it found a support. Now, in fact, traders should understand this, okay? This is an area wave cycle that has been completed here. We are likely to have a complex area wave as we are here, but we need to be careful if we are selling, okay? So, gently, okay? Finally, he ran away. My friend, he ran away. He runs away, okay? So here we are. So the price out of this pitchfork tool, now you are a mature trader. You know what to do now. You will project it, okay? You will project it, okay? You know it now? You can do it, okay? The best approach, watch the full length of this video, then open a demo account, and then practice until you master it. So first projection, bring us here. So if you buy here, it's going up. This is a target point, okay, on the edge of the channel. It's out of it, you project it again. It's your chart. Don't be afraid to draw it, okay? If anyone say, why are you drawing it? Say, it's my chart, okay? I can do whatever I like, okay? That's why we don't influence, okay, the trading style of traders, okay? Okay? It's out of it, just keep projecting it. So now you see, okay, the beauty, okay. So now our bearish pitchfork tool has become obsolete because the music has changed and the price is now in a rising channel, okay. In a rising channel, beautiful. An area wave cycle is completed and a new trend has begun. Area wave count guidance. Okay, it makes sense? We are now in a rising channel. So you see this channel here, if you want to talk about market geometry, because we cannot talk about area wave without, we cannot talk about pitchfork tool without talking about, okay, market geometry, okay? Traders who are using the market geometry always use the pitchfork tool. This is one of the #1 tool for market geometry. It is also a powerful tool that a lot of ordinary traders are neglecting. I recommend to traders, average traders, retail traders, to learn to master the pitchfork tool. It makes sense? It is also powerful. To summarize this video about how to draw the bearish pitchfork tool like a pro, one is looking for a high followed by a lower low, and the price rallying up from a point B to point C under a low trading volume. With 3 points, we can draw the bearish pitchfork tool. All right. This verification will allow us to know or to manage, okay, the risk. All right. If the price or the financial instrument rallies from point B to point C, all right, under a high trading volume, we will prefer the point C to be close to the point A. All right. On the other hand, if the point B is not a new lower low, we will prefer the point C to be close to the point A. If it is not, it's a risky trade. We will look for, okay, all right, we will manage the risk carefully. All right. The pitchfork tool, the bearish pitchfork tool, allow us to pinpoint the best or the high probability bearish trade setup. When we identify a bearish trade setup, we must apply a top-down trading method without violating the market pattern. Okay, very, very important. And by combining the technical analysis and the fundamentals. Okay, very, very important. So once we draw the bearish pitchfork tool, if we are buying on the edge of the bearish pitchfork tool, This is a contra trend. We need to be aware of it. It's a contra trend, okay? We want to sell. We want to set our resistance level. So we want to combine the pitchfork tool with horizontal support and resistance level, Fibonacci retracement, and Fibonacci extension levels. I hope you have learned something for this video also, okay? And we put it into use to make excellent trading and investment decisions. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. But put a comment below why you disagree with us. If you truly love this video, please feel free to share it on Google+, on Twitter, on Facebook. If you love our recording, feel free to subscribe to Dayprotraders YouTube channels. If you have any comment, put it below, or any question, put it below. If you want us to record a similar video, please put a comment below, write it down. George, would you like to record a video about this subject? And I'll be looking at it and record a video that will help other traders to improve their trading. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders, talking about how to draw the bearish pitchfork tool like a pro. Speak to you soon.